everyone, and welcome to this week's Mish's Market Minute hosted by StockCharts TV with Mish Schneider. That's me. Once again, I have an action-packed schedule, so let's get going. I thought this week, since we've covered so much on the domestic US and commodities, this week would be really interesting for us to look at all of the different international ETFs. And I get my information. Sorry, Raul just chimed in there. I get my information from this. What you're looking at on your screen is Market Gage's proprietary ETF monitor. And what it does is it divides the different categories of ETFs. This one happens to be the international ETF. So you can see here, this is up to date, that we go through the Europe ETFs, Asia, the Americas, and Africa. Now, of course, we don't have time to go through every one. So what I did before I came on was I hand-selected those that would give us a very good example of things that are set up now, things that aren't set up, things that could be a possible short, and things that would actually be a good long, very actionable very soon. And over here, what you can see is not only do you get the change, the percent change, high-low volume, but let's take a moment of the volume here because you can see the tremendous variance from only 476 average shares a day in the Egypt ETF to Brazil, which trades over 30 million, China, which trades over 32 million, and of course the US having the biggest one with the SPY at 75 million. But also, as you know, I've talked about phases, and what's interesting is every single one of the country ETFs is in a recovery phase, which means it wasn't a bearish phase, it was under the 50-day moving average, and now it's over it. And when you see it lit up, it means just the day of it actually cleared the 50, and in this case, interestingly enough, it's Brazil. So let's go through the ones that I've hand selected for you. So what we're going to do in each one is we're going to use the US stock market as the benchmark to compare it to when we go through the triple play indicators. And we're going to look at the various ones that I've picked out for you. And what you're really going to walk away with today is a solid trading plan based on what's the best, what's the worst, and what you should just watch, but definitely not trade right now. So how I'm going to go through it is we're going to start in Europe. And we're going to look at what the phase is. Well, we know all phases are going to be in a recovery right now. We're going to look at the triple play indicators, the real motion indicators. And then if I think it's a good trade, I will give you the risk, where would be a good entry, and what kind of profit targets we might be looking on based on the risk reward. So let's start here with Switzerland. Now, Switzerland is interesting because it actually was rated one of the top ETFs in the ETF monitor during the European section there. And so what we can see right here is a couple of interesting things. By the way, Switzerland would be very tied into gold, which is one of the reasons why it's so heavily weighted at this point in terms of our trend strength indicators. So what happened here is very similar to what we're seeing even in the US market, which is in the SPY, it came close to the 200-day moving average. It's backed up. Here's your 50, which is starting to slow positive. It's pretty far from there, and it's holding the 10. But if we go down here, it has started to underperform the US benchmark, but the momentum is hanging tough. It still needs to give us a little bit more, and that would probably be the point where it might get close to the 200-day. And then, of course, what we really want to see is for the real motion to cross the 200-day as well. So what I would say at this point, pass, and we can watch it. The next one here is the Netherlands. The Netherlands, I don't know that much about necessarily. I think they're more oil producing than anything, but don't quote me on that. But what I do know is from the ETF monitor, it was second in line after Switzerland. So this one too, to me, would be a pass. And the risk is partially the reason. You're sort of in between the distance between the 200 and the 10, so you don't really have a good risk reward here. However, unlike what we just saw in Switzerland, this is actually outperforming the US benchmark, and real motion is showing some momentum, although it's slightly waning, nothing to be concerned about. Again, not really seeing a big edge here for a trade, but it is interesting to see some of these emerging markets and some of these country funds actually starting to maybe look like down the road a good trade. So this is Russia, which is considered part of the European ETF. And I actually thought Russia was kind of interesting too. This is definitely outperforming and the momentum has done well, but again, has not taken out the 200. But also, same kind of thing. Look at the distance between the 200 and the 10 is almost equal, which means you don't have enough edge to risk under the 10 to get to the 200. And certainly you don't have enough to risk down to the 50. So I would actually almost say if this thing can cross the 200 at the same time that the real motion crosses the 200, that would probably be the better situation. But for now, it's a stand aside. Now we have Greece. Now I have been a big fan of trading this GREK ETF. I've done this many, many times. I've done it with our members, etc. We've been out of this now for quite some time. So I was really happy to see this come up actually as one of the worst performers in the European, but I think in terms of the chart, pretty interesting here. So first of all, you can see it's in that recuperation phase. So here's your 50-day moving average. Volume, it trades about 47 to 50,000 shares a day. You can see we've had our good spikes once in a while. But if we look down here, it's still slightly underperforming the US benchmark. However, this is what interests me. Not only is it a phase change, but check out this real motion indicator here. Notice the dot has definitely cleared the 50. In fact, it cleared the 50 before the price did. It's also now clearing the Bollinger Band, and it's looking pretty good. So this would be one that I'm going to give you actual numbers for. If it clears above these highs, which is 1840, I would probably give it a little bit of fudge here, and instead of just risking to the 50, I would risk under to this low, which is about 1685. So essentially what you're saying is you're going to risk about $1.50, which means if you get in, let's say at 1850, you want to look for about 2150. Well, why is that an interesting first target and a 2-to-1 risk reward? Because it pretty much gets close to filling this gap right here. It would also be a very nice way to show that this actually has based out and it could continue on up to 25, closer to the 200 days. So this is one I'm going to give a big check for those of you who are interested in trading it. Now, the next one that I found interesting was also, interestingly enough, one of the worst performers in terms of the ETF monitor, and that's Italy. And I think, by the way, what I didn't say about Greece is Greece has also started to open up. They had a big surge of cases, but they're opening up now. And Italy, as we know, after 10 weeks being ravaged before that with the virus and 10 weeks of pure quarantine, now they are opened up as well. So we're watching it very carefully. So it's no surprise to me that right now we're clearing that 50-day moving average here. But again, volume has been meager. Well, of course, we're heading into a US holiday. Still well underperforming the US benchmark. But just like Greece, starting to show some momentum here on the real motion indicator, clearing that Bollinger Band. So here's how I would look at this one. This one, I would like to buy, let's say, over 2115, which takes out these levels here. And I would use 1950 as a risk. So that would be basically under these levels right here. With these low volume ETFs, you can see the volume here is better. It's about 150,000 shares per day. Right now it's light. So that actually at least has some volume to it, but I still like to give them some room. So that means if you're going to risk, again, about $1.50, $1.75, you want to see if you can get from 21.15 up to about 24.25. Let's say right around these levels right here would be a good target. So this one too is going to get a check mark for a possible trade. Now let's go into Asia. Again, the phases are all the same. We're going to look at all the different parameters that we just looked at for the European ones. And we're going to start with China, because China is actually, from a geopolitical standpoint, extremely interesting right now. As you know, we have a lot of conversation happening between China and the US, not such good conversation. Plus, things are starting to heat up again between China and Hong Kong. So from a political standpoint, not so great. From a virus standpoint, they were the first to start opening up, and apparently their numbers that are coming out are looking better for some recovery, but we're certainly not seeing it here. It seems to be more involved with the political problems than what's happening in terms of any kind of economic recovery problems post-epidemic. So there are two ways to look at this. If we look down here, this is really starting to underperform It's broken down under everything on the Bollinger Band. And if we look at real motion, what's also interesting is you had a divergence here. When it couldn't clear the 200 here on price, it actually cleared the 200 here. That's a divergence that one would have expected maybe meant that this would clear the 200. That's why you have to wait sometimes. You want to wait for the confirmed phase change on when the indicators are telling you that it could happen. But instead it's collapsed. So there's two ways to look at it. One is if the market comes off in the US, guaranteed this will come off too. So you can actually use this 10-day moving average or the high today about 39 as a risk point if you wanted to go short and sell it under 38. Also, however, if the market holds up, this could come back. You would want to look for it to clear over 39, but before you did that, you'd want to see some kind of improvement, at least not only in the price performance versus the US, but also you want to see this real motion not fall apart. So again, to me, this is probably right now more on the recommendation for the short than from the long side, at least at this point in time. Now let's go on to the next one. This is South Korea. Now South Korea, again, very similar to what I showed you, although it is closer to the 10-day moving average than the others. It wouldn't be my favorite trade, but it's certainly not a bad trade. However, this is the problem right here. It's still underperforming the SPY, and even though the real motion is doing well, I would keep an eye to see what happens here over the 200-day moving average, but we're still pretty far. So if there's any kind of trade, it's going to be over basically this 54 level, and you'd have to use the 10. I'm not crazy about it, so we're going to pass on that one. Instead, what I'm going to show you is this one, which is Vietnam. Now, Vietnam, I think looks probably, of all the charts that I've shown you, one of the best. And the reason why is that you've got nice things going on in all of the indicators. First of all, as you can see right here, this cleared, broke down under the 50-day moving average, and then when it popped up, it gapped right over the 10. Of course, had we been paying attention at that point, which I wasn't, that would have probably been a good entry right there. And you can see that right at the same time, it started to outperform the SPY, and at the same time, it had continued to hold the 50-day on the real motion and clear the actual Bollinger Band. So that makes me say, well, what are we going to do right now as we're in a different point? So now what we've got here is a situation where we can use the 10-day moving average as a risk. There's also, if you look at a different time frame, on the weekly chart, an exponential moving average that comes in at around 1310. So that would be my risk point here, would be 1310. Then what I would probably look to do is wait for these two highs to clear. Yesterday's high, or I should say Thursday's high was, Wednesday's high was 1375. Thursday's high was 1376. I'd want those two areas to clear. And then I think you can risk about that 65 cents to see if you can get a pop to, up to the 200 and maybe even clear the 200 up to 15. But what's got going for it is, first of all, this has at least some decent volume. On a low trading day, it traded 174,000 shares. You can see it can go triple to that when it gets going. On the momentum, even though it's come into some resistance, on the price, some resistance against the longer term moving average on the price performance, it's still outperforming the SPY. And if we go down here on the real motion, it crossed the 200 and came off. So if it keeps skidding along this 200, then that would give me a good enough reason to say, all right, let's buy it through 1375, risk that 65 cents, maybe not go in for a full position, but nonetheless, I give this one a big check mark too. Now, another one in this space is India. Now, there's actually two different ETFs for India. There's IFN, which you're looking at right now, and then there's also PIN, but PIN barely trades. This trades more. Again, on a low volume day, you have 43,000 shares, so you can see this will go up about 100,000 shares. I mean, in terms of volume in general, when you're trading these ETFs, unless they're really popular like the ones I just showed you with SPY, you're not going to get a lot of volume. So there's a couple of ways that you have to trade them I have found to sort of make up for the lack of volume. Number one is you really sometimes want to wait to the end of the day before you either enter or exit. And I'm talking about ones that really trade under 50,000 shares again, because you do have high frequency trading computers that gun for the stops. So if you have, a few hundred shares on a sell stop at, like I just showed you before with Vietnam, at 1310, and it comes in at 1320, there's a good chance that your stop's going to get hit and then it's going to go right back up. So one of the ways that we compensate is we keep our stops out of it in the day, and we place our stop at the end of the day. So if it's trading at 1310 or a little lower, we're gone. With the entries, it really will depend. If there's some intraday interest, or we've gotten a couple of days of higher volume, or what we call an accumulation of volume, that means we've had an up day and the volume has been above the volume from the day before. That might give me some confidence that in the middle of the day it's worth getting in, and I'll place my mental stop and make it a hard stop at the end of the day if I need to. So I just wanted to give you that. This is definitely one of those lower volume ones, but still not too bad to trade. At least there's some liquidity. So what I would do with IFN is, again, this could kind of go either way, but I would probably say, since you're so close to the 50-day moving average, if it clears this 10-day moving average right here, and clears, let's say 1415, that's my level, you have a nice tight risk here under this low, which is basically around 1375. Now that's a 40-cent risk. That's not too bad for two reasons. One is it makes sense. It means that the phase would fail. We would want to see, of course, a little bit of this starting to move up in terms of the price performance, but the Bollinger Band is above the 50, higher above the 50 than the price is. So it could mean that we get one more push over that 1415, and we're going to see the real motion indicator clear the Bollinger Band and at least start to move up. But it's really that tight risk reward. That's the thing that I like the most. So 1415, 1375 in terms of risk. And then you're looking for about 90 cents. That means you can get a move to 15 and take your first profit. And by the way, the other thing that I neglected to tell you, with all these trades, when I talk to you about a first profit target, it means with whatever you have on your balance, you immediately raise that stop to a no loss stop. So in essence, you take off part of the position, half the position with a profit, and you take all the risk off on the second part of the trade. And then you can afford to wait to see if it gets to a second target. So this one, again, gets a nice big check mark. Now, you know, my favorite thing in the world so far, those of you who have been listening to me every week, is to combine the two things that I love the most, which is trading and teaching. So that's really what the whole purpose of this entire presentation is today, is not only introduce you to the concept of those of you who may not watch these country funds, but also to teach you how to do it and then give you the specific trades. So now we're going to move into the Americas. So we're going to start with America, and this is SPY right here, right? Okay, so now what we know is going on right here is this. It's pushing up against that 200-day moving average. Clearly, this would not be a trade that I would take unless we got an absolute phase change, which means we need 2 days of a confirm over the 200-day moving average. But even with that, I would be cautious until we go down here. And of course, we can't benchmark it against anything. But as soon as we go to the real motion thing, look what's happening here. This is the zero line right here. So it's still a little bit negative in terms of the momentum. We would want to see this at least clear the zero line, and ideally, we'd want to see this clear the 200-day moving average in real motion too. So we're having a little bit of a divergence here. So I'm not necessarily going to recommend this trade, but it certainly would help with the other country funds that I recommended if SPY actually does its job. Okay, now let's go on to Canada, our neighbor to the north. And again, I don't see any great edge here. Once again, we're sitting right in the middle, even though we're sitting on the 10, but we're sort of right in the middle between the 50 and the 200. We're underperforming on the SPY, but real motion is looking a little bit better. So if you really said that, oh, I like Canada, I think, oh, by the way, there's some natural resources and it's somewhat commodity based, I want to get involved with this Canadian ETF, then you would have to see it clear 25, and I would probably just risk to under the 10, which looks like it would come in somewhere around 24 and a quarter. So a 75-cent risk wouldn't be too terrible. But like I said, with the real motion doing okay, and this in the middle, and this still underperforming the SPY, not my favorite trade, but not too terrible. So next I want to look at Brazil. Now, Brazil has got a lot going on right now. First of all, they geopolitically, they've been a little bit crazy. They've had some issues with China, but it is a commodity producing country. And again, those of you who follow me week after week know how interested I am, particularly in the food commodities. And so Brazil is a big coffee producer. It actually has their winter is our summer. So if you get any kind of frost, let's say in the coffee crops, that would be a huge move for the coffee prices, which also have been languishing, by the way. It also is a big exporter of soybeans, sugar. So what you saw was up until Thursday, this was underneath the 50-day moving average, and now it's actually popped up. So the rule, again, is first of all, you want to see a phase change confirmation, which means you would need a second close above this 50-day moving average, which comes in about at 23.97, so about $1 from where it closed today. So it would have to hold that level. And then if you get that confirmed phase change and it can hold that 23.85-ish level, wherever that 50-day moving average is, then you wanted to take a risk, you could actually risk to under the 10 here, which would be, let's say 23. So let's say you had to pay 25 for it, $2 risk. Brazil's got a little bit more volume going on here. It's got a bigger ATR or average range. Look at this. This actually trades over 21 million shares on a low day. So this is one where you can actually have a $2 risk and feel comfortable with it. Now, why would I potentially like Brazil? Because, you know, the worst is in the market already. We have this phase change, it confirms. So figure over 25, risk down to 23. And let's go down here. It also started to outperform the US. And let's look at the real motion indicators. It's far from the 200 in price, far from the 200 in the real motion indicator, but clearing not only the 50, which it cleared before the price did, but it's also now clearing the Bollinger Band. So again, I'm going to give this one a check mark for a potential trade. Now let's go into Africa. Okay, so Israel is considered part of that. I know that sounds weird, but Africa, in the way it's situated, is that the Middle East and Africa are sort of combined in the country fund ETF. So it says Africa, but it's really Africa and the Middle East. So this is Israel right here. Now, again, what's so interesting about the Israel ETF is look how low the volume is. This traded about 4,580 shares on Thursday. It can spike, but not very much. So you can see that this is one of those that I tell you that you wait to the end of the day, you wait to see some kind of an accumulation of volume, some kind of interest that's going on in this particular ETF before you want to get involved. But, whoops. But it also is sort of like, to me, but not too bad. It's holding the 10. It's just now, after underperforming the SPY, sort of in line with it. And again, look what's happening here with real motion. It was doing better. So if the momentum holds, it starts to creep up a little bit in price here. Maybe you want to keep an eye on this, but when you're so close to the 200-day moving average, I don't see the great advantage. Remember, I'm looking for the distance between the risk and the reward to see if we can actually make double that in terms of profit. And again, not really seeing it here. Okay, this one is South Africa. I've been watching this ETF for a while, and this too, by the way, has some nice decent volume to it. On a low day, it traded 357,000 shares, so this will trade 500,000 shares on an average good day. And actually in the last couple of days it's had a little bit of volume in here. I like this one. This is very commodities based ETF. And so right now what we have here with EZA is that the price performance, look at that, it's starting to actually move away from the SPY a little bit. It's actually increasing here in terms of its momentum from the actual Bollinger Band here. It's closer to the 200 here than it is here in price. So the recommendation I would make if you were interested in this would be to be buying it over 35.12. That would be really a little bit over what the high was on Thursday. And I would risk to 32.40. I would only risk to underneath this, all this work here and underneath the 10-day moving average. So really, basically, you're talking about a $2.50 risk to make $5, which means you're looking to see if this can get to 40. If this thing has that kind of momentum and gets to 40, then I again would always take my profit, go to a no loss stop, and wait to see what happens if it can clear the 200-day moving average. And by the way, what we'll do sometimes is if we buy it on a recuperation phase, we make money and we're at a no loss stop and I can start trailing the stop, we'll add on the next better phase change. That is definitely another way to play these phase changes. That's something I'll cover more in another time. But this looks pretty good all around. We're going to get this one a nice big check mark. Whoop, come on, come on. Okay, and this is the last one we're going to cover here. We're going to end with Egypt because I thought it was an interesting chart, because if things actually deteriorate in the market, you know, you always want to sell the weaker things. And I did your daily 5 the other day. I talked about selling Netflix on strength, and that, by the way, turned out to be a great trade. And I talked about possibly selling the regional banks if the market got weak, but it didn't. Instead, it got stronger. So the same philosophy here. You look for the weaker sectors to short. So Egypt right now, even though it cleared the 50, the slope is still somewhat neutralizing. It's under the 10, but look how weak it is here on the performance versus the US. And the momentum, which was starting to gain here over the Bollinger Band, has now decreased. So if the market sells off, you would have a pretty decent risk against the 10-day moving average to see if it breaks down under the 50. My caution for you, though, of course, is volume. Look, this barely trades. So I'm using it as an example because obviously we're talking about country fund ETFs, but this is a good illustration for any instrument that looks similar, something that changed a phase potentially, but is underperforming the SPY, is not really getting any good momentum, has not been able to clear, let's say, the closest moving average that I like to use, which is the 10-day moving average. That gives you a short risk on a short trade that you're looking for to see if it can either break down under the major moving average and keep going south, or it holds there and at the very least you turn it into an active trade and you get out quicker. But anyway, I do think it's interesting that Egypt in general, compared to almost everything I've shown you, is really looking, although it's above the 50, one of the weakest. So again, just to review here, we have a situation now where you've got a lot of ETFs that you can look at. If you ever wanted to look at the ETF monitor, we do have it in our market gauge. And again, I know that I have been showing you week after week our triple play indicators and our real motion indicators on StockCharts, and we're still in process of getting those things available to the public. And of course, if you have any questions at all, please feel free to ask me. I see a lot of you comment to me on the actual YouTube comment box. I answer everybody. You can also text me on Twitter, excuse me, TweetDeck, I was going to say Twitter, and that's at Market Minute. So that's it for now. I hope you have a very nice long Memorial Day weekend, and I look forward to speaking with you again next week. I hope you walked away with some good actionable trades, took some notes, and can review it with those parameters, and best of luck in your trading. Thanks so much for watching. This is Mish signing off. Bye for now.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.